On Hurricane Tropical Storm Harvey, of course. The storm has shut down half a dozen oil refineries right there on the Gulf, and there's the map of the ones that have been closed. Stephen Schork of the Schork Report joins us this morning. So this could get worse, couldn't it? If the storm hits Port Arthur and down goes the Aramco refinery, and also if it moves east towards New Orleans and towards Louisiana, it also gets worse for the refineries. Give me the long-term picture. If we knock out these refineries and some pipelines, how much does the price of gas go up to us drivers at the pump?
Well, as you accurately reported before, we've already seen about a 15 to 20 cent gallon pop in gasoline prices. If we go past history, instance 2008 with Ike and Gustav hurricanes, Katrina, Rita in 2005. So certainly we could see a doubling of those prices. So another 15 to 20 cents on top of that.
Now that
remains
to be seen. You're telling us that you've seen that price rise at the wholesale level, right? But I want to know,
yes.
When does it hit the pump? When do I have to start paying those prices, and all of our viewers?
Well, it's all going to depend on once the shortages begin to show up at your local gasoline station. So right now we're still trying to ascertain the extent and the duration. So right now, 1 out of every 3 barrels of refining capacity was in the path of Harvey. Half of that production or half of that refinery capacity is already out. To your point, if that storm continues to move towards Louisiana, then when we add in the refineries along the Louisiana coast, we're talking about 4 out of every 7 barrels of refinery capacity. So that's going to be a significant shortage in gasoline supplies going forward. So to answer your question with regard to how high, how soon, you'll start to see it in the weeks ahead. 1 week, I would say, at a minimum. But we also have to keep in mind what time of the year we're at right now. There is going to be the issue of the switchover towards a winter-grade gasoline, which is a cheaper gasoline to manufacture. But once again, if you don't have the refinery up and running, you're not going to manufacture the gasoline regardless of the spec. So you're certainly looking at a situation where we could be going in, certainly into the fall, paying considerably higher. Now, Stuart, let's all keep in mind that gasoline prices historically, adjusted for inflation, are already extremely low.
Sure.
So any pop that we do see will be muted. And we also have to keep in mind that this is economics 101, Stuart. High prices are the best cure for high prices. So we will see a significant pop in price, but there's going to be plenty of gasoline floating out there, especially coming in from Europe, that's going to close that arbitrage opportunity and get oil and get gasoline to the market in a prompt manner.
Stephen, here's something that surprised me. We've not yet, to my knowledge, not yet seen lines at the pump in the mid-Atlantic states. We did after Katrina. People just jumped right out there and filled up every tank that they got, every vehicle they got. So far, we've not seen that in the mid-Atlantic states. Do you expect it?
Well, let's see, the biggest difference between now and Katrina was on the Friday afternoon of the Katrina made landfall on Sunday. Everyone was expecting, every meteorologist thought that storm was going into Florida Panhandle. That storm took a significant turn on that Saturday, so it really caught the market and the industry with its pants down. We knew for over a week now where this storm was heading. So the issue of offshore production, onshore production, inland production had prompt warning, and the industry instituted their emergency protocols in a timely fashion. So they shut down in a very timely fashion. So now we just have to wait and see over the next couple of days, does this water receive, and how quickly can we get this production back online? So right now, at the end of the day, Stu, we still have plenty of gasoline, plenty of diesel fuel in the tanks at this point. Okay. So there is no panic right now. And we're also, keep in mind, at the end of the season, so once we get through this weekend, the Labor Day weekend, demand begins to fall off in a very precipitous manner.
Okay, we hear you. Stephen Schork, as always, thanks for joining us. Appreciate it, sir. Thank you.
Thank you, Stuart.